o'clock.
Okay, good. Welcome, everybody, and thank you for joining us today. We will begin shortly. Please check your sound, and if you're having a problem, try switching to a computer sound or phone in for audio. Attendees will be muted during the presentation unless the speaker requests feedback or asked to raise your hand. At the end of the presentation, we will open the session for questions. If there are a lot of questions or discussions and we run past one, we'll keep the session open for those who wish to stay on. When you leave the webinar, you will be asked to complete a short survey. This helps us plan future webinars as well as evaluating guest speaker. The webinar is being recorded and an email will be sent to all who registered when it is available on the FGBC website. This is a lunch and learn series that we do, building blocks of building green. So FGBC, if for all of you that don't know, Florida Green Building Coalition is a leading organization promoting sustainability with environmental, economic, and social benefits through education and climate-specific certification programs in Florida. We are proud to be a sponsor of this webinar series, Building Blocks of Building Green. We hold this every month. We have over 28,000 certified projects in Florida. For more information on certifications, you can email, we give you an email, or you can visit our website. Today's lunch and learn, I'm going to be your moderator. I am on the board for Florida Green Building Coalition. And our guest speaker is going to be Chris Cucci. He's a senior VP and chief of staff for Climate First Bank. Chris has spent all of his nearly 20 years banking career in the Central Florida market. A native of New Jersey, cold part of the world, Cucci moved to Orlando in 1997 to attend the University of Central Florida, where he earned the Bachelor of Arts degree. This is really important, showing you the lender's side of sustainability. And Chris, I really appreciate you doing this for us and letting folks know what your bank does. And I'm going to kind of turn it over to you. Do I need to do something?
No, Chris, you're muted, and then you just can take over the screen.
You there, Chris?
Chris dropped off for a second, so I'm sure he's there. Here he is now. Here he's back.
Okay.
Sorry, I think I lost you all. Am I back on now?
Yeah, you're back on.
Okay, I'm so sorry about that. Okay. Am I able to share my screen? Is that okay? Or
yep.
Yeah.
Yes, please do.
Okay, perfect. Let me just pull up my information here for you. And good afternoon, everybody. Apologies, I had my Wi-Fi went down right in the middle of signing on to this today, so I had to quickly get on my phone's mobile hotspot, which I'm clearly not that good at using, so it's giving me a little trouble. But it's good to talk with everyone. Yeah, as Peggy mentioned, my name is Chris Cucci, and I'm with Climate First Bank, which some of you may have heard of. Probably many of you have not, because we're a new bank. So we just started, based in St. Petersburg, with our original headquarters in June of 2021. So just celebrated our 1-year anniversary a couple of months ago. Since that time, we have expanded to open an office here in Central Florida, where I'm located. I'm in Orlando. And really the goal long-term of the bank is that we probably won't have a lot of physical locations because we are a net zero company. So we're focused on having a zero carbon footprint across our board. And that's always easier if we don't have a ton of brick and mortar. And also just with our focus really being on being a digital forward bank that's able to accommodate, I'd say 99% of our customers solely through online services, digital services. We'll probably have like a flagship branch in the markets, each of the markets we serve, but with that heavy focus on being able to do things efficiently through online. So I mentioned here just that we're what I call a values-based bank and a de novo bank. That's by definition, when you're a new bank under the FDIC, your first 3 years, they call you de novo. And what that really means is a lot more scrutiny, a lot more strict regulations to follow because the FDIC wants to keep an eye on us and make sure that we're growing responsibly. And then eventually after year 3, they kind of let you go off into the world of banking and I'll have a little bit more freedom. At least in the terms of banking, which is pretty highly regulated. So we're looking forward to that because after the end of year 3, which for us will be June of 2024, we will have the opportunity to do what we're doing outside of Florida, do it nationwide. Right now, we're restricted to just the state of Florida. But we look at that as an opportunity because it allows us to kind of fine tune what we're doing. And Florida is a wonderful state to be starting a bank that has a focus on green construction and environmental sustainability, as you all probably know. So we are a benefits corporation and a certified B Corp pending. We're one of the only B Corp banks in the United States. And for anyone who isn't familiar, a B Corp is a for-profit company that has a stated mission or purpose that you can't deviate from. So shareholder pressure and investors can't push you away from that mission. And for us, that mission is to provide environmentally and socially impactful lending in all of the markets that we serve. A big name that people know out there in the market in the B Corp world is Patagonia. So if you've heard of Patagonia, of course, the outdoor company, they're one of the big successful B Corps that exists. Another one is Ben and Jerry's, and there are numerous. They're all over the place now and pretty quickly growing across the US because there's a lot of companies that are saying, hey, we're capitalists, right? We want to make money, but we want to do it in a way that is socially and environmentally responsible. And for us, we feel like, being a B Corp, it holds you to some external measurements and rules that kind of keeps you more authentic to that purpose. And we always say, I have it up here, just our motto, which is changing finance to finance change. And we do this by incentivizing our clients to use green construction methods and materials in their projects. And I always remind people that bank with us, our deposit customers, that where they put their money matters. So when you put your money in a bank like Climate First, you know that your deposits are going to be redeployed into green construction and social development type construction projects in all of the communities that we serve. I don't want this to be like a advertisement today for Climate First. So really when I'm talking to you today, I'm really just trying to speak to you in the context of sustainable construction finance and some of the things that we look at. My background in banking has been heavy in the construction and development world for the last 10 to 15 years of my 20 years in banking. So very passionate about, the construction industry. I've worked a lot with GCs and subs over the years, understand progress billing. I've worked on the finance side for those contractors, as well as financing for the last decade or so, numerous developers and investors in the commercial real estate space throughout all of the Southeast US, but today just focused on Florida. So, today, as I talk about some of these programs, I'm going to be using some of the things we do at the bank as an example. But again, it's not a commercial for the bank, and I really want you all to just consider me a resource to use when it comes to any questions you might have on the topic of renewable energy finance or sustainable construction finance. I know you're all in that business, but it's probably always helpful to have a lender that you can speak to about things candidly, bounce an idea off, maybe just get an idea for structure. Sometimes you're probably talking with a customer and they're just wondering if what they have in mind is feasible and financeable. That's a great thing that you can come to me with as a question. And obviously I would always love to help you directly, but if it makes more sense for another partner, another lending partner to help, I'm certainly happy to just be there as a resource and share knowledge with you as well. So, when we talk about the lending programs, and I have it kind of separated into two main things here on the screen, but you'll see the solar lending on the left, which is commercial and residential solar, and then other programs we offer, which is a big part of what I do, EV charging infrastructure, green community association loans, which is for like condo, HOA, and timeshare lending. And that's green building retrofits or sometimes ground up construction of green certified construction. And then we also do some special programs for LEED certified, Florida Green Building, Energy Star, and then of course, social banking programs, which are things that have a positive social impact in the community. So when we talk about all of these things, again, I'm going to use the bank as an example, but I want you to just consider that I would be a resource for you in any of these areas. Now, when we talk about the bank specifically, there's a lot of things we do that are just kind of the normal things a bank does. If a customer comes to us and says, I want to borrow money to buy a home, or, I'm a dentist and I want to build my office building for my new location, we're certainly going to look at that. And we typically refer to those deals internally as a mission agnostic loan, which means, yeah, it's a good thing for the community. It's helping a consumer or a small business owner to grow, but it maybe doesn't necessarily help us in achieving our bank's mission of environmentally and socially impactful lending. But we always see that as an opportunity to educate, probably like you do with your clients. So there's things you definitely won't see us doing, right? We're not going to do, and we fortunately don't run into this a lot in Florida, but we're probably not going to do an offshore drilling project. We're not going to do a plant that's doing, plastic bottled water bottling, things like that. We're not also going to do stuff on the social side that maybe displaces communities, like gentrification type mixed use projects. So those are loans that are really counter to what we do. But those mission agnostic loans, like I mentioned, something like building a home or just a general office building, we look at those all the time. But we try to incentivize those borrowers to consider the advantages, both the financial advantages, economic, and also the the environmental or the social advantages of including some green features in their projects. And the way we do this is we'll typically look at a slightly larger loan amount or a better interest rate if they'll consider adding some of those green components to their project. So, the first one I want to touch on today, just to give you an idea, is residential solar. Anyone who knows this industry knows that, kind of like a lot of specialties in the construction world, there's many good players, but sometimes there's some bad players out there who kind of tarnish the reputation of the industry. Residential solar today is really driven by the installers and by their sales teams who are going out and canvassing neighborhoods. You probably had, if you're a homeowner, they come door to door and they want to talk to you about the benefits of solar power. In that industry, the lending right now, or historically for the last decade, really has been dominated by fintechs. So fintech or financial technology, these are non-bank lenders who are offering loan programs for a variety of things. They're out there doing car loans and credit card programs, but a big area where they've been very successful is in solar lending. Now, the advantage that these companies had for many years is that they were able to, much quicker than a bank, underwrite a solar loan. So the representative who showed up door to door could sit with that customer in their kitchen or in their living room with an iPad and have them apply for a loan. And within a minute or so, they would have a loan approval, and they were able to close their sale for the solar project, get that financing for their customer, and move on. The drawback to those fintech programs, when we researched them, is that they have what's called a dealer fee, which is hidden from the consumer, but it amounts to about a 25% fee that the financing company is charging to the installer for access to that loan product. So of course, as an installer, you can't absorb that cost yourself, so you upcharge your customer. So these customers end up paying about 25% more for their solar installation, which, as we all know, kind of impacts the mission of trying to get solar out there and make it gain adoption in the community. So when we looked at that, we decided we were going to try to disrupt that industry. We did come up with a fast underwriting program, so we can underwrite a residential solar loan in 30 seconds. Customer can apply on an iPad. We give all the installers that we work with their own unique link, and it's branded with the solar installer's branding. Sometimes it's an electrical contractor or roofing contractor who's also doing solar. But this allows them to quickly apply for the loan. 30 seconds, they have an approval, and we have no dealer fee. So right off the bat, we're typically saving the end consumer around 25% on the cost of their system, which makes it more viable for them to get a system installed. And what's cool about these solar systems is they're 100% financed, and that's common across the industry. You'll find that with our competitors as well. But you can also include the cost of doing a re-roof So, if your roof needs to be replaced or repaired to get the solar rooftop installed, that can be included in the financing, long-term financing of 25 years. And, typically what's neat with solar is, as you probably know, the return on investment is fairly quick. You can usually within about 7 years get a return on the expense of having installed that solar system. So this is something we've seen that's been really popular. My focus is on commercial, so I jump over here to commercial solar. Very similar. The terms are usually a little different. They're more customized on commercial solar. So we aren't at the point yet where we can underwrite and approve a loan in 30 seconds, but we can still do it pretty quickly within a few days most of the time once we get the information from the customer or from the contractor.
Chris,
yeah.
Chris, we did get one question. I don't know if you want to wait for him, but
no, please, yeah.
They wanted to know if you provide construction to term loans for the owner builder market.
Absolutely. Yeah.
And they said, do you offer green mortgages where the back end ratios are more favorable for clients? And does your bank recognize Energy Star and FGBC certifications?
Yeah, so you know what? I'm going to jump ahead and happy to answer that question. So we do both ground up construction and retrofit construction in the commercial and the residential space. And we are going to offer, so that's what I mentioned earlier, we incentivize with preferred terms. So the preferred terms are typically a lower down payment, also known as a higher loan to value, and lower interest rates for projects that are either green building, Florida Green Building certified, Energy Star LEED. So we look at any of those certifications as an incentivized point where we're going to be more open to doing some more flexible terms for those customers who are using that. So that's absolutely something we do. And I'll kind of jump back, but to delve into that a little more, that also ties into this community association green loan program, where we're also looking at a lot of LEED, Energy Star, and Florida Green Building certified projects. So if you have any customers that are either homeowners associations, condo associations, or timeshares, we've done a variety of things from retrofits. Right now condos are going through a 40-year recertification process. So every 40 years in many municipalities in Florida, they have to recertify the structural integrity of the condo. And that creates obviously a big wish list of, not even a wish list, but a big demand list of things that they need to do to get their condominium back up to quality for today's building standards. We're looking at that right now because there was a boom in the 80s. So now we're in the 2020s, right? This is going to be the decade where all of these research are happening around the state of Florida. And it's a great opportunity for us to go in and to start looking at those green energy retrofits as well. So we're doing stuff like, insulation, windows, could be solar, HVAC, all those different features. And those are things that we also finance. And if they're willing to, get the certifications, we're going to be able to go, go even stronger on some of the loan terms we offer. Is there another question that came up?
Yeah. Do you interact with the PACE program, which is
Yep, very familiar with PACE. I financed it I've worked with PACE for many years. So what I will tell you is this, PACE in Florida I feel like the restrictions or the requirements for PACE are fairly loose in Florida. It's pretty easy for any project to qualify. So we're not as excited about that as we're going to be for a LEED certified or Florida Green Building certified project. But we will certainly consider PACE as a component of the financing and something that we're looking at. I know that PACE would, they like to get sometimes pretty aggressive as far as limiting the down payment requirement from the customer or from the borrower. And the bank philosophy, and I've seen this with most banks I've worked with, is that we really look at PACE as another component of debt. We don't look at it as a replacement for the customer's down payment or equity in the project, because we want to see that the customer does have some skin in the game. So we'll typically give a little bit of a bump. If the normal loan to value for a project is 80%, maybe we'll go to 85 with PACE. So we'll allow it to limit a little bit of the customer's equity in the loan, but we're not going to do like a 90 or a 95% loan, which almost completely removes the customer's equity from the project.
Now, do you use green appraisers?
Not always, but when we have projects that are, LEED certified, certainly, or when we're looking at Florida Green projects, there are certain, certain times where it makes sense.
Yeah, because we have down in the Manatee and Bradenton area, Sarasota area, Manatee is the platinum certified in green, the only one in the state of Florida. Sarasota is gold. Lakewood Ranch, Babcock are all green certified. And we're trying to get the agents to market that accordingly and appraisers to get on board. And I know I've got a lender that's on this call, Homebridge Mortgage, Pete Meinerich. He even went and made sure that some of his appraisers were green certified to accommodate for that. Because that's what we're having problems with, is the appraiser not giving value, particularly with solar. I didn't mean to interrupt you, so go ahead.
No, not interrupting at all. That's really interesting, and it's something that we're encountering too. So you're right. Solar is certainly, especially on residential, it's hard to always get fair consideration for value. Now, I will say on the commercial side, it's been a little bit easier, only because you can, commercial appraisals are generally based on the income approach.
Right.
So it's easy because you can show the reduction in utility expense, which increases the NOI. So the income approach typically pencils out for a higher valuation. But certainly on the residential side, or when you're talking about owner occupied commercial, it is really important to find appraisers out there who understand the space.
My screen just went black.
Oh.
Go ahead, keep going. I've got to figure out what I did.
Yeah. So I don't want to get too much into this because it sounds like really, I think everybody's really interested more in the ground up construction space. But the one thing I will mention here, just because I think it is interesting, is the EV charging infrastructure. I'm not sure how many of you have run into this, but as electric vehicles are becoming more and more common, there's a higher demand from people for the electric vehicle charging stations. And so there's financing programs, just to be aware of, that are available. There's tax credit advantages. If you're working with a developer who is located near an interstate, there's also some pretty interesting credits available, or rebates, I should say, from the DOT, because they're trying to build out this EV charging infrastructure. So we've seen hotels, apartments, condos, gas station, convenience stores that want to offer electric vehicle charging. And it can be a moneymaker for them. So not only can they make some revenue from the actual cost of the charging, but when somebody's parked at one of those chargers, they're typically not going to just sit in the car. They're going to go into the convenience store, into the retail center, and shop. And studies say that for every minute they're charging, they're spending an extra $1 at a retailer. So it can be a really interesting add-on for customers as you're consulting with them on ground up projects in commercial, is to look at that, that EV charging as a component. Started to touch on this a little bit, but the condo association, HOA lending, this can be something that is really interesting. We talked about the condo side, which is focused on, right now for us, a lot of those recertification projects. But things like an HOA who's doing a new clubhouse, sometimes they're townhome properties and they have some shared expenses as far as utility. So solar can be a good advantage for them. What's unique about these loans is they're not secured by real estate like a traditional real estate loan is. They're secured by the assessments that are made from the association to the residents. So when you have a lender that understands that space, it can be a pretty attractive thing for them to try to finance these things, because many times, unfortunately, the HOAs and the condo associations don't have enough in reserves to cover all of the improvements that are being done out of pocket. And they are a lot of times nowadays also open to a lot of green building, certification, green construction, because it becomes a selling point for them, and almost like in some cases an amenity for them because of the reduced energy expense that you're going to have at the building as a resident. So I think we started to talk about this before, but the different certifications that are out there, these are something that I know you all deal with all the time. And what I would say is for us, what's really important when we're working with a contractor on a construction project, and probably equally important to you with a lender, is that we need it to be a good partnership. We're entrusting the contractors to do quality work on a timeline that they've committed to. And then, of course, the contractors they're reliant on us as the bank to be responsive when it comes to draw requests and to getting that funding out there efficiently. And in the end, I think those partnerships really make or break the experience for the customer. So we really want to provide as smooth an experience as possible. And then the last thing I just wanted to touch on, that I'm happy to answer more questions, but I think maybe a couple have popped up, but just this, the concept of banking for social good. So we lend in all of these other spaces that, and these, by the way, are spaces where people are very open to green construction components, but education, so schools, this could be preschools all the way up to universities are looking at this stuff. Arts and culture, you look at things like museums, publicly or public-privately funded projects, beneficial financial services, services that serve low to moderate income communities. These communities a lot of times they're being overlooked for some of the green building components, and they're the ones that need it most, because a lot of these homes and apartments in lower to moderate income areas are some of the least energy efficient. And those are the people that really could benefit the most from some savings in their utility expenses. So when we talk with affordable housing developers, more and more of them are interested in considering green construction as a component of their project. And then, of course, I have healthcare and well-being on here. When you talk with medical practices all the way up to institutional like hospitals, I'd say there's a much greater interest today than there was in the past decade in some of these green construction components. So that was really, I kind of sped through it today because I saw questions popping up and I really wanted to spend more time talking with you and answering questions. So let me go ahead and just take a look here at some of the questions that have popped up in the last moment. So I think we talked about appraisers. And yes, the question, I think the end of this question from Todd was hoping that we do have a pool of green appraisers. We have a handful in Florida right now. We haven't run into an issue where we couldn't get a valuation. So I think but we obviously always looking to continue to grow that portfolio of green appraisers. Pinellas County, we have more remodeling than new. So yes, and adding EV charging to a home sometimes too. That was from Kathy. And yeah, Kathy, I will tell you for sure, EV charging infrastructure, we're seeing demand in commercial. We're certainly also seeing the demand for those, in the consumer space or in residential homes. And that's something we're happy to help with if you have questions about it or need to talk more about it, but it's pretty straightforward, 100% financing project. Not super expensive, especially on the residential side, but there is, as you probably know, a wide variety of options out there in that space. I do a lot on the commercial side, and I can tell you the range could be anywhere from 20,000 to maybe 100,000 for some of these EV charging solutions, and it's just depending on the speed of the charger, the capacity, and typically some of the other installation needs that you have. Sometimes there's underground drilling and things that have to happen to accommodate commercial. Residential is generally much cheaper because you're installing in a garage. And then I do see another follow-up question, it looks like, from Kathy. As an architect, do you offer loans that include the architect's fee? Sometimes the contractor offers to wrap this into the loan, so you get refunded once the construction's off. So we look at the total construction cost of a project, which includes hard and soft costs. So your fee as the architect would be included in soft costs, and then we set an advance rate against that total cost. So I think to answer your question, yes, that would be considered as part of the cost that we are financing. Let me see, I think we may have had another. Yes, Carlos asked a question if projects must be located in Florida. Yes, currently for the bank, we're only lending in Florida until the FDIC takes our newbie handcuffs off, which will happen in June of 2024. And then we will be going outside of Florida immediately. And then Ann Pollock asked, do you recommend any certain residential solar installers that work with you? So we have been working very actively to build a strong list of residential installers. And if you've worked with a bank before in any construction capacity, you know that we go through what's called a qualification process, where we look at those construction contractors that we're working with and we vet them make sure insurance is good, make sure they have a good track record, clean, better business bureau, all those sorts of things. Look at past lawsuits, all sorts of stuff. So we took that same approach to qualifying our residential solar installers. And we have a list now that includes almost 50 installers across the state of Florida. So I know my contact info is going to go out to everyone. Feel free to reach out to me if you ever do need any references, and I'm happy to provide you with some resources on good installers, depending on where you are in the state. And then the next request was to add my contact info to the chat. So I'm going to send this out to everybody here just in case it wasn't sent already. And the phone number that I'm providing here is the only phone number I have. It's my personal and business cell. Had it for like 20 years. So that number won't be changing anytime soon. And I just sent it to everyone. Where are we? Solar installer interested in onboarding. Anthony, yeah. Anthony, please reach out to me. On the onboarding process and approval process for our solar installers is pretty simple. It's an online form that you fill out. If you happen to be a FLACIA member, we have a fast track process for you. But even if you aren't a FLACIA member, you know, I think there's a lot that we can do to help. So,
Chris, we skipped over the question from Ralph Locke, just right above Anthony's.
oh yeah. Okay, are you going to offer any EMs for FGBC green certified structures? It's not something that we have a formalized program on yet, but this is something that we're trying to address right now. Ralph, what do you do? I'm curious.
I'm gonna let Ralph speak. So give me 1 second. Go ahead, Ralph, you can speak. Ralph, are you there? Can you hear?
I think he's on mute.
Oh yeah, Ralph, you're on mute. There you go.
Okay. Yeah, we've been hearing this for about 25 years now about energy efficient mortgages and banks stepping forward for green certified structures.
Yep.
So we're just curious if you were going to come up with a program for that, because I've been a builder for over 30 years, building energy efficient homes since the 90s. So it's a question that's always been out there.
Are you looking at, you're specifically looking at residential building, is that correct?
Residential or commercial.
Okay, so on the commercial side, this is already a component of what we do. We don't have a formal program because they're portfolio loans, so we can do really whatever we want on them. But we do certainly offer lower down payment requirements and lower interest rates for Florida Green building certified structures. On the residential side, there's kind of two facets to it in residential mortgage lending. There's portfolio loans, which are the loans we originate and keep on the bank's books. And that's not what most lenders do, right? Most lenders, they originate a mortgage and then it gets sold. It's a Fannie Mae or Freddie Mac product typically, or FHA or whatever. On those sellable residential mortgages, that really is going to be determined by the secondary market, the buyers. And I do believe we will finally see that because the green bond market has just grown so much in the last couple of years. The demand is there. But even outside of those sellable mortgages, on the residential side, we do have portfolio products today for LEED and for Florida Green building certified. So I'd be happy to put you in touch, Ralph, if it's helpful with Jim Hennessy, who runs our residential department. He could share some of those programs with you.
Okay, because I was just curious because we work with quite a few organizations that are doing low income housing, and they're always looking for energy efficient mortgages for the new homeowners.
Yeah, that's been what we've seen as the biggest area of challenge in the market, because a lot of times you're talking about low income housing for the individuals, the low income individuals as owners.
Yep.
So the challenge is this: by regulation, the lowest down payment a bank can do on a portfolio loan is 20%. And generally, when you're talking about low income housing buyers, they want to utilize FHA programs or some of the other reduced down payment programs, which have 3 to 5% down payments. Those programs, again, by regulation, a bank cannot originate and hold on their books. It's completely against any regulation we have for home lending, and that's nationwide. That's all banks. So the only solution for those loans is that banks originate them and then sell them to a secondary market, which is typically FHA for those types of loans. And FHA does not have a program yet for energy efficient mortgage. And I think that becomes the issue right now that we're all facing. And that's an issue for the whole industry, honestly.
Yeah, because we've been waiting like 25 years.
Yeah. Now, again, where I do think that could shift is that there's a much, much greater interest from the secondary market investors in green bonds today. So they want to invest in, in green notes. And that becomes an opportunity here because those energy efficient mortgages represent one of the largest pools of green bond opportunity that we have. So, but stay tuned on that. I don't have an answer. I'm waiting for the same answer you are, honestly.
Okay.
Yeah, thank you. And please do get in touch because I will at least share what we do have available for you in case it's helpful.
Okay.
Kyle asked, what areas in Florida are you seeing the most activity or potential? Right now, I would say that the primary markets, the bigger metros in Florida, as you know, have become pretty hot over the last several years. It's become harder and harder to find great money-making opportunities on the real estate development side, only because you have either limited land opportunities, the land has gotten a lot more expensive, or of course the same cost problems you have everywhere, which are high construction and material costs. That has pushed a lot of the activity to secondary and tertiary markets. So, areas where we're seeing a lot of activity, it was mentioned earlier, but Manatee County, Charlotte County, still obviously there's plenty of pockets in the bigger metros as well, but those two areas are really strong. Jacksonville is always historically, if you look at cycles in Florida, usually starts to have their recovery and their expansion a bit trailing some of the other larger metros. So Jacksonville still has some opportunities. Polk County, which is like, Lakeland area between Tampa and Orlando on I-4, growing like crazy, probably getting a little red hot, but still seeing a lot of activity and opportunities there. And then North Florida has picked up a good amount, I'd say, in the last few years. Panhandle, if you look at Pace, which is a kind of a bedroom community outside Pensacola, they're growing like crazy, lots of rooftops, lots of commercial demand. Kind of anything surrounding Tallahassee has been picking up a whole lot. It's not just student housing and politics anymore. So there's a lot of growth happening there industry wise too. Then of course, going down the Southeast coast, always there's a lot of thriving areas, but I'd say again, the lack of availability of developable land, just because the markets are so saturated, has made it a little bit tougher. So I would really encourage looking at some of those smaller kind of secondary, tertiary markets for activity. North of Orlando, obviously, Orange County's gotten pretty hot. But if you go a little bit north or a little bit west of us, like Lake County, Sumter, Marion, where the villages are, that's a great area as well. Marion also, of course, being where Ocala is located, which has been a really good area for logistics and transport. So you're seeing a lot of industrial demand up there too. So those are, I know I gave you a big list there, but I think Florida is a good place to be right now. So I wanted to mention a lot of the communities we're seeing a lot of activity in. And I got another message. I think that for some reason, my contact info is not coming through the chat, but I will make sure everyone, I'm sure there's a follow-up email we can send it out to for all of you.
I'll include it, Chris.
Yeah. Question here from Bradley. Are the loans primary for solar and energy, or could we do water efficiency systems? Yeah, absolutely. So we're looking at all components of the project. I know I talked a lot about renewable energy today, but renewable energy, I would say it's low-hanging fruit because it's something that we can finance on its own at 100%. And the reason for that is our collateral is the equipment, and they stop paying. It's kind of easy for us to take it off the roof. It's a little bit different when you're talking about some of these rainwater, gray water systems where they're really a component of the real property once installed. So we certainly do them, and we do those as a component of a real estate transaction, but we would provide those preferential terms and pricing to developers or investors who are including those systems in their property. And then there's a connection. Last question I have here from David was, what is your lending limit for horizontal and vertical construction, green certified residential mixed use development? So our lending limit's $9 million internal. I've done deals up to 15 million with syndication partners. You know, as we talk about things that are more speculative, we're probably gonna get a little bit tighter on some of our appetite and requirements. So it really is case by case, but I can tell you that our total lending limit per project right now is 9 million. I have run out of questions here. I'm not sure if anyone has any additional, and again, I'm always happy to talk some more with you one-on-one, either through phone or through email. I'll make sure both are provided to you.
Can you hear me?
I can.
Okay, great. Because I still on a black screen. I wanted to let you know, like in our area, Manatee and Sarasota, our MLS covers more than almost 1/3 of the state of Florida, almost half of the state of Florida. And we went green in 2011. So we've got outstanding green fields to use when we are going for green appraisers. I would like to see more banks encourage what you're doing, more sustainable lending. And like I said, our problem is more so in the appraisals. But if people need help with contacting appraisals, Sandra Adamatis, who's the vice president of the Appraisal Institute, has a resource and can tell you what appraisers are in particular areas. And anyone can email me. I can't do anything on my screen here to put it up on the screen, but they can email me and I'll give them contacts or follow up and get them some green appraisals. You know, Florida Green Building Coalition is trying to work with the property appraisers throughout the state of Florida on giving an exemption, an exemption for green certifications. But it's going to be real important that these certifications, that people are aware of them, maintain them, and have the paper trail on them. And in order for them to get those, I'd be real annoyed if I built, like in our area, Lakewood Ranch mandates green, Babcock mandates green. Why there is not more green financing being done is beside me.
Yeah, I will tell you, obviously we started the bank with this in mind, and our predecessor bank, my CEO Ken's last bank, First Green Bank, was kind of building the, I'd say the prototype for this, but he was a little probably early to the game at the time. When we started this bank, we saw there was just far greater demand in the markets for what we were doing. And I do believe you're going to start to see other banks follow suit. I would love to tell you it's going to be other community banks like us that are kind of grassroots and starting out, but I don't really believe that to be the case. I think that where you're going to start to see it first is going to actually be some of the larger national and regional banks. And the reason for that is pressure. It's pressure from their investor base. It's pressure from Wall Street, because again, the ESG stuff, environmental social governance concept in the corporate America. And then also obviously just again, a greater shift and focus towards green finance as a component of your business model as a bank. It's gotten a lot more attention in the last several years. And typically those publicly traded larger firms are going to be the ones that shift to it first, just by necessity and by pressure, honestly. But eventually I think that will trickle down. And you'll see some of the other smaller banks in the markets, the community banks, which are really your best partners, because they're the ones that have local decision making, understand the local markets here in Florida, and can typically get things done with the most flexibility. You'll start to see them follow suit, but it's going to take some time, I think. So that's where I think it is really important to build good partnerships. Even I talk to other banks all the time and non-bank lenders, because my goal whenever I talk with a referral source or with a good customer is that even if I can't do something for them directly, I want to be able to provide them with a resource that can. So that's what I would say. You know, the best thing you can do is just consider me a resource. I'm never going to be the guy that's going to try to sell you on anything, but I'll tell you what I can offer. Or if I can't do something, I'll tell you that very quickly too. And I will try to point you in the direction of a resource that can help you with whatever your need is.
Well, and we're trying to, a lot of our problem is the fact that people don't even know they're buying these green certified homes. So we're trying to do teaching seminars to let them know that. But, and Florida Green Building Coalition is trying to do a database that should be going live maybe by the end of the year or beginning of next year. But we had a green building registry. Meg came on and did one of our lunch and learns, and they have a database right now. So the people that want to know whether a home is green certified can get on that line, can get on that website, type in the address, and it will tell you what certification that particular home received and where their points were so that you can fill in when you're listing a home, or a person can see what went into that home that made their green certification such. We're getting there, but it is all a matter of these lunch and learns. That's why it's important people jump in on these lunch and learns, because the more that we educate people, the more the more relative it will become.
Chris, there's 2 questions from Anthony in the chat.
Yeah. Residential solar financing. First question was minimum FICO qualification. So ours is a little higher than some of the fintech companies out there. It's a 680 FICO score minimum. But again, you know, I think the benefit they're going to get is a decision in 30 seconds and 100% financing for 25-year fixed. And then it says on SFR or solar financing available for modular manufactured mobile homes. You know, kind of a wide distinction in there, just because there's the newer manufactured modular homes, I would say differ somewhat in quality from something that was built in the 1970s, you know, so that we're certainly open to it. It's something that we have done in some cases on modular homes, but we're really gonna hone in on the age of that property. And the reason for that is that what we don't want to do is we don't want to install a solar system on a property that's worth more than the building itself. You know, and if we're going to do that, there's different considerations that we would make, because we normally don't put a lien on the property. We don't do a mortgage when we do a solar loan. We just put a lien on the equipment. And we don't want to do it in a case where the equipment is worth more than the building underneath it.
Does anyone have any? Yeah, does anybody have any other final questions for Chris? And I will make sure that when I send a follow-up that we include Chris's contact information.
And Chris, I'm sorry I went black. I had so much to say.
Oh, it's okay. No, and I appreciate everything you were saying. I will tell you that trying to educate the public, the business community and the residential, you know, consumer community out there is a big thing for us as well. So anytime we can collaborate, I'm happy to. Also, just know that if there's anything that you all want to promote for FGBC, we have a website. We finally launched a blog recently where we're sharing a lot of content from third parties that we align with, you know, that we feel like are kind of part of the team here in Florida, and we would love to promote anything you all are working on. So if there's ever any resources you want to share or new things happening with FGBC, just please let us know so that we can spread the word for you.
Wonderful, wonderful.
Thank you. And Chris, can you forward me a copy of your your presentation in PDF? They're asking for me to include that with the recording.
Yeah, absolutely. I'll make sure and get that to you.
Great.
Chris, I really appreciate you taking the time to chat with us. Like I said, it's all in educating and sharing, and hopefully we'll get everybody on board. I'd love to have everybody on board in our area. It's kind of discouraging when we are coming from areas that mandate green. When you go and pull up listings in Lakewood Ranch, there's like one listing that's green, and the whole development's green.
Right.
So hopefully with all this education, people will start understanding that there is true value in these green certified homes. I mean, your homes are probably worth anywhere from 10 to 15% more than homes that are not green certified. And like I said, if we ever get to the point where we get an exemption, I'd be pretty annoyed if I didn't have that certification in my hand and my house was green certified.
Yeah, that's a really
And
good
then the
point.
Florida Green Building Coalition is the only one that does the retrofits. So, I mean, I live in a house that I think Tarzan lived in before we did. So I'm retrofitting my home and it provides that option. So there's not a home out here that cannot go that direction.
Absolutely. Yeah, I think it's ongoing battle, right? But it does seem like things are at least going in the right direction. More and more people seem to be interested in asking these questions. So we just have to get that information out to them as much as possible.
And I appreciate everybody joining in on this call. I wish I could see who all did. But I do appreciate everybody that joined in on this too. And Chris, your time.
Oh yeah, no, happy to do this anytime. And thank you to everyone who joined today. Really appreciate you being here.
Thank you.
Thanks. Thanks, everybody.